people who are running multiple different wallets, it's always better to assume something far less. A16Z estimates that roughly 30 to 60 million of those 220 monthly active addresses are real monthly crypto users. And we're not going to attempt to speculate on what we think the user count is in 2024, but I think there's been plenty of evidence that we've seen more users on board on chain.
Okay, welcome to the pod. It's a season for Messari to publish our broadly anticipated thesis, and on the back of that, we're recording a number of podcasts. There are two main sections to the thesis: the state of crypto and the sector thesis. The sector thesis discusses narratives and forward-looking thesis for major sectors. And in this pod, we will be discussing the state of crypto with some of the contributing analysts. So to give you a little lay of the land of what's to come, in the state of crypto, as the title suggests, we talk about macro trends that drove the crypto industry in 2024. More specifically, the macroeconomic environment, crypto markets and policy, fundraising, adoptions by institutions and users more broadly. We talk briefly about Solana crossing the chasm. And we talk about, of course, Memecoins dominating the narrative in 2024. And last but not least, DePIN's breakout year. Basically, it's all woven into a narrative. And at the start of each topic, we'll have the analyst briefly highlight or give a very brief summary of what they talked about in the thesis before we go into Q&A. So with that, before we kick off the discussion, let's do brief intros. I am Maartje. I am VP of Research at Messari.
Thanks for the intro, Maartje. I am Sunny Shi. I am an enterprise research analyst here at Messari, otherwise known as DeFi Monk on Twitter.
Hey everyone, I'm Dylan Bane. I'm also a research analyst on the enterprise team at Messari, known as Dylan G. Bane on Twitter. I cover mostly DePIN.
Hey guys, I'm Andrew Dyer, Twitter as OX Synthesis, and I'm also on the enterprise research team.
Okay, so with that, let's dive in and let's start with the macro backdrop and policy. Andrew, could you give me the high-level scoop on what you wrote about the macro, specifically perhaps for crypto markets in 2024 and what you expect for 2025?
Yeah, sure. So a lot of what applied to legacy markets applied to crypto just because BTC and ETH have been acting as risk-on assets like stocks. So most of the year was about investor fears shifting away from high inflation and more towards the health of the labor market. So initially, the market was looking over its shoulder for reaccelerating inflation, and that never really materialized. And then in the middle of the year, we started to see the unemployment rate pick up and spark fears of an incoming recession, which also didn't materialize. So risk assets, including Bitcoin, spent most of the year climbing a wall of worry of sorts about whether we would have a soft landing or not. Going forward, given that the economy and the consumer has been pretty robust, I think the debate is now shifting to when the Fed is going to pause its rate cuts. It's likely we're going to get a 25 bip cut in December, maybe with some hawkish guidance as the Fed wants to give itself some more optionality going into a new administration and new year. But it's likely that all of the things that are impacting the S&P and the Qs are going to continue to impact BTC as they're now much more tightly linked through the ETFs.
When we talk about crypto markets in general, right? So outside of top assets, what drove markets in 2024?
Andrew briefly mentioned this, but there were a lot of idiosyncratic crypto drivers this year. I mean, the markets across equities did pretty well, but for crypto specifically, you had the launch and approval of the Bitcoin ETF, and then the subsequent approval and launch of the ETH ETFs. You had the halving this year for Bitcoin, a little bit lost in the noise, but typically tends to be sort of a bullish event for Bitcoin price action in general. And then towards the end of the year, you had an election result that was an outsized win for crypto. I mean, I think all markets have reacted pretty favorably to the new Trump administration, but for crypto particularly, given just the regulatory overhang of the last administration, you definitely did see outsized benefit. And so as a result, I think Bitcoin made two separate runs to all-time highs, once to over 70K in Q1 of the year after the ETF approval. You had some severe chop and volatility in Q2 and Q3, but with the election results in Q4, yeah, we finally hit 100K BTC. So reason to celebrate for sure.
But what about outside of like BTC, right? Where did people make some of the biggest gains this year, right? And where were some of the biggest surprises from that perspective?
I think it was mostly a Bitcoin-led year for the most part. I mean, Bitcoin dominance definitely crept up throughout the year, but it was probably, if you move beyond Bitcoin and ETH, the year of Solana. Solana rallied really hard. I mean, starting mostly in 2023. This year Solana made a run to new all-time highs. I think the crypto native bid really showed out for Solana as an asset, both from liquid funds abroad as well as crypto natives themselves. Just shifting sentiment towards Solana and away from Ethereum.
What do we expect to see in 2025, right?
I think tailing on what Sunny said, I think most of 2024 caught crypto native investors a bit off guard, given that it was so heavily driven by BTC and ETH and BTC and Sol rather. I think going forward, if we see a similar surprise into 2025, where now Solana has largely become consensus, not that it won't perform well into 2025, but I would say if ETH manages to get a similar passive bid, it's now starting to see 9-figure inflow days into the ETFs, which I don't think a lot of the market's well positioned for that going into the new year. So that could be a point of change going forward. Not to say that BTC and Sol won't do well, but that could be something different to expect going into 2025.
Yeah, I would definitely agree with Andrew there. I think for a while, there were really zero expectations for the ETH ETF. And after the election, with the regulatory overhang lifted, ETH has really outperformed. And so I can see that continuing into 2025, especially as grayscale outflows net out. And that bodes well for a potential Sol ETF launch as well, which would definitely be good. And lastly, I think this year, as we mentioned, we saw a ton of idiosyncratic drivers for crypto versus other assets. I think going into 2025, as that sort of cools off, we may see the crypto markets more closely linked with some of the indicators and economic drivers of the broader markets. And so I think the health of the broader markets will play a bigger role in 2025 for crypto than in 2024.
Now, let's switch gears to policy. So, Dylan, the crypto policy and regular landscape was a tale of two narratives in 2024. On the one hand, we saw aggressive SEC enforcement action and the crypto industry's response to that. And on the other hand, there was the Trump campaign adopting a pro-crypto stance. Can you talk us through that?
Yeah, so I think we came into the year with a ongoing SEC enforcement blitz. So 2023, the SEC started some pretty large cases against Coinbase and Binance, accusing them of offering securities as an unregistered exchange, broker, clearing, and other functions. So 2023, there's a lot of uncertainty about crypto. The big North Star validation was the kind of good news on the court side from both Ripple as well as a path forward to ETFs for Bitcoin. I think going into 2024, the first big story was the SEC approved the Bitcoin ETF, didn't have any way forward of opposing it with court decisions. That also led to the ETH ETF down the road. However, the SEC was still very aggressive. So They continued pursuing Coinbase, Binance, Uniswap, starting in 2024, also accusing them of offering securities, as well as some high-profile NFT cases. So the SEC was not backing down, even with some losses in 2023. So I think the crypto industry did a really good job of pushing back, mostly through legislative bodies like Congress. So I think the first big win of the year was the pass of FIT 21 in May. There, they kind of created more clarity on what's under the SEC's jurisdiction and what's under the CFTC's. It was generally more positive for the crypto industry, although a lot of unresolved questions remained. So I think that was one of the first big momentum shifts after the ETF. And then the largest was probably Trump's embraceal of crypto in late May, early June at Mar-a-Lago. From there, he quickly adopted a very pro-crypto stance like we've never seen from a presidential candidate, maybe even any other high-profile political candidate. So, I think at Bitcoin Nashville, he made a series of very large promises to the crypto industry, including freeing Ross Ulbricht, the founder of Silk Road, a strategic Bitcoin National Reserve, firing Gary Gensler, major reform in the SEC, among many other promises. And I think that really shifted the crypto industry as a whole in favor of Trump, just on the issue of crypto. And that momentum continued when Harris became the nominee of the Democratic Party. They showed more receptiveness to crypto than the Biden administration did. There wasn't a lot of clear proposals or initiatives. And I think a lot of the crypto industry is very concerned that there was just a lot of very light promises that would just end up continuing the current state of affairs in Washington if Harris became president. So then with Trump winning, like Sonny said, things became very good for the markets, especially in crypto. There are very high expectations that Trump, going into his first year, will make good on a lot of his promises. Much of his cabinet is very pro-crypto, holds crypto. Most of the appointments have been well received by the crypto industry. So I think we've seen a complete 180 from lots of fear about the future of crypto regulation in the US to lots of optimism. I could also highlight some of the more broader themes in 2024. I think one was kind of mixers and privacy. So illicit finance versus the trade-offs of privacy. How do we regulate that? How do we ensure privacy without enabling criminals using crypto? I think the ETFs became kind of clearly a right, or like felt like a right for the crypto industry. So I think that opened up institutional adoption to seeing a path forward for crypto regulatory clarity. And I think ETFs are just the first step. I think there's large expectations that there'll be favorable regulations for tokenization, stablecoin adoption, and other real-world assets on crypto rails with the events this year. I think self-custody rights are also a big theme. So a lot of Republicans in particular were concerned that if a CBDC emerges, that would restrict the rights of ownership of private citizens. So they kind of adopted a pro-crypto stance on that issue in terms of holding your own assets. And then I think finally, a large trend is just the influence of crypto in politics. The crypto lobby is estimated to have spent between 150 to 200 million, which is among the top 5 industries now. I think that's solidified the industry's status as a mainstream industry that has political influence, will probably continue to increase in the coming years.
So you alluded a little bit to it just now. What is in stock for 2025, right? So obviously it remains to be seen, whether Trump can stick with all of the promises that he made, and just in general, some of it's going to take time. What do you expect to see in 2025? And also, like, what will it change in the crypto market?
I think the first big thing is Gary Gensler already indicated that he's going to resign at the beginning of Trump's presidency. So that opens up a new seat for SEC commissioner, as well as the other top officials at that organization. Trump's already indicated who he's likely to support. But I think that will first kind of change the dynamics of the SEC. kind of shift it more, probably in a more pro-crypto direction, although it's not fully clear how the SEC will change. Meaningful substantive change will actually mostly come from Congress. So I think a lot of the legislative work in terms of Fit 21 in 2020 for the vote to repeal SAB 21, which kind of prevented banks from custodying digital assets, and then Biden vetoed. I think that might be re-implemented or voted through a fully Republican-held Congress. I think there'll be a major stablecoins bill. I think Trump has shown lots of support for stablecoins. Paul Ryan wrote a very large piece in the Wall Street Journal earlier this year about the U.S. maintaining the dollar's power and status by employing stablecoins. And then I think some of the bigger issues, or what the crypto industry wants, are the strategic Bitcoin reserve. That is a big question mark in terms of if that can actually get passed. I think a lot of people are concerned in multiple directions. First, that's a big step forward for the US to create such a reserve. It could, in theory, threaten the status of the dollar. Like, there is talk that Bitcoin is not competition to dollar, it's competition to gold. However, that's not quite clear. I think there's a lot of uncertainty globally, which might make that ultimate decision unlikely in terms of implementation. And then I think another big issue is whether crypto capital gains taxes will continue. I think it's unlikely that a bill eliminating capital gains taxes on crypto passes, just because of the implications on all other investments and shifting capital throughout the economy towards crypto that I don't think equities and other asset classes would think makes sense from their interest standpoint. Yeah, I think the larger things are probably on the unlikely side, but we'll get more clear regulation on stablecoins, central bank digital currencies. The SEC, CFTC should regulate crypto. And then just, I think, in general, a pro-crypto stance throughout the executive branch.
Andrew, one comment that stood out to me in your macro section is that at the very least, a friendlier regulatory environment removes many of the possible negative outcomes going forward. That makes crypto majors more attractive for capital allocators who may not have had exposure for those reasons. So this is a nice segue probably into your take on the institutional landscape. When I started working in crypto full time in 2018, the mantra was the institutions are coming, and they didn't for a very long time. I mean, we've seen bits and pieces of it. I mean, I think it's 2021 or 2020 that comes to mind. You start off by saying the institutions are here, and this time for real. So let's start with the catalyst there, right? The ETF. We've alluded to the ETF a couple of times so far, but talk me through what happened there.
The BTC ETFs were objectively a massive success. BlackRock's IBIT hit 40 billion in AUM in 200 days or so, which is record shattering. So, since their launch in January, I think they've blown all expectations out of the water. IBIT has already flipped BlackRock's gold ETF, and now we're getting daily inflows averaging around almost $500 million a day, which is insane. So we're definitely
even by traditional standards.
Oh yeah,
right?
Yeah. By traditional standards, like flipping ETFs that have been in existence for like a decade is crazy. And so we're clearly tapping into a new buyer base that's never, on the retail side, they may have never downloaded Coinbase and they want exposure. According to BlackRock, a lot of that, the inflows have been from individually owned accounts, so not wealth managers or funds. But we have seen in 13F filings for IBIT, we've seen pension funds like Wisconsin, they're already a top 10 holder of IBIT. We've seen hedge funds like ones run by Paul Tudor Jones become top holders, and we're probably going to continue to see some large names pick up holdings in these ETFs as allocators get more comfortable with the products. It definitely takes time for these institutions like pensions and say sovereign wealth funds or even smaller institutions to go through the process to get new products and assets approved. Just in August, I think Morgan Stanley approved thousands of its financial advisors to start putting the BTC ETFs into their client portfolio. So that is an ongoing process. And so I think we'll see incremental flows from both financial advisors and new institutions going into 2025. Whereas in the past, even just this year, we had to worry about idiosyncratic headlines that you mentioned, like these left tail events of, a DOJ investigation into Tether, or what Dylan mentioned with the hostile regulatory environment, creates a lot of potential for days where BTC is down like 5%, which is just it's not great for traditional asset managers to have that level of vol and those types of, like, not black swan scenarios, but idiosyncratic large sell-off days on those types of events. And I think we're slowly moving away from that, and that should make these assets more attractive to traditional allocators.
But ETFs weren't the only area where we saw more traditional institutions getting involved. Where else did we see TradFi getting involved, and what stood out to you in particular?
They're getting involved on a bunch of different fronts. BlackRock and Franklin Templeton launched tokenized treasury funds, which each amassed close to $500 million in AUM. Other firms like Fidelity and Citi, they're looking at crypto rails for conducting FX swaps and payments. Fintech companies like PayPal issued their own stablecoins. So like PiUSD came out in 2023, but saw broader traction this year when they launched on Solana. And other firms are also looking to spin out or expand their individual crypto product offerings.
Where do we see some of the banks coming in, right? Because I saw news of like Goldman spinning out digital assets business. I saw Bernstein, in my mind, the gold standard for research, start publishing research on Bitcoin. Where do we see some of the banks getting active beyond some of the more conservative stuff that we'd already seen?
Yeah, a lot of them have been working on stuff in the background for like the past few years. So JP Morgan this year expanded its own blockchain platform. They changed the name from Onyx to Kinexys, and that's for cross-border payments and tokenization. Goldman spinning out into a separate entity for its digital assets unit. So I do think some of the banks are realizing that the volumes that crypto does and the activity and its potential to change like the payment space is something that's worth their attention, and they're building out separate teams to focus on that going forward.
Yeah, because obviously in the bigger scheme of things, when you talk about the size of the market, I don't know what it's at today, but 3 or 4 trillion is tiny for a lot of those players, obviously. But so the question is, just in general for the institutions, where do we go from here, right? So how do you see this unfold, and how is it gonna positively impact crypto, right? So why does it matter?
I think, as Dylan mentioned, with the future stablecoin bill, as we get more regulatory clarity around that, we're going to see more fintech and exchange type companies issue their own stablecoins, which should bring more users on chain just inadvertently. More allocators, advisors are going to put the ETFs in their client portfolios, which should increase this passive structural bid to at least BTC and ETH, which will probably have ripple effects into smaller altcoins. And lastly, more institutions getting involved at any point in the value chain. So like it could be custody, exchange, issuance, various forms of tokenization. All of that adds legitimacy to the space, and I think takes away from the reputational risk that crypto might have had in the past years and past cycles. So I think that all of that's going to be a net positive for the entire market.
Switching gears here. So at the other end of the spectrum, we have users and user adoption. Sunny, where are we at? You threw out some numbers, And how has 2024 brought new users to crypto?
Institutions are definitely nice to have on board. Even I wasn't expecting them to come on board so rapidly. But the big question has been, where are the homegrown users? I think that's been the question for a couple of years now, ever since we got more programmability and ever since we had DeFi summer in these cycles prior. And if we look at the numbers, it's very encouraging. I think A16Z put out a number of 220 million monthly active addresses in September, which is more than triple since the that number has more than tripled since the end of 2023. And obviously, we can't associate every single address to a singular user. I think with the presence of Sybils and people who are running multiple different wallets, it's always better to assume something far less. A16Z estimates that roughly 30 to 60 million of those 220 monthly active addresses are real monthly crypto users. And we're not going to attempt to speculate on what we think the user count is in 2024. But I think there's been plenty of evidence that we've seen more users on board on chain. And I'll cite some specific examples. Obviously with Solana's uptick in Memecoin activity, which we think has been probably the retail onboarding event of 2024, in the same way that NFTs were the case in 2021. We've seen, leading Solana wallets like Phantom really surge in the iOS App Store rankings. And that's always a good indicator. I think in November, momentarily crossed over into the top 10 most downloaded free apps on the Apple iOS App Store, surpassing WhatsApp and Instagram. And we think that keeping an eye on these rankings will be important as the cycle progresses. But that's really been probably the indicator for me that more users are interacting on chain. And Phantom really has done a great job of improving their mobile UX over previous browser wallets like MetaMask. And so, I think that was a very, very encouraging indicator. Something that Andrea's covered extensively is the rise of stablecoin adoption this year. And so stablecoin adoption, particularly in emerging markets like Sub-Saharan Africa, Latin America, and Eastern Europe, we really saw new use cases emerge there for stablecoins. Individual people and businesses using it as a store of value and as a medium of exchange because of how accessible they are. I think that is one of the maybe less talked about adoption stories of 2024. And then, earlier in the year, we saw some pretty impressive numbers coming out of the TON blockchain with Telegram, specifically with their tap to earn mini apps like Notcoin and Hamster Combat, which have been just user onboarding phenomena. And, it's good to keep in mind that a lot of these users aren't actually interacting on chain, but just getting them involved with crypto protocols and familiar with crypto concepts has really been, I think, really positive for the industry. And some of these tap to earn protocols like Notcoin, their token airdrop has resulted in Not being one of the most widely held tokens in crypto at 2.5 million users, over 2.5 million wallets holding them. And so that's another good indicator there that people are entering the blockchain. Particularly, I think globally, the Telegram mini apps performed really well, akin to how Axie Infinity was really a global phenomenon in 2021. Polymarket, another example, signed on close to 1 million new accounts so far in 2024. We know that the notional volumes for the 2024 election on Polymarket are more than 300x that of the 2020 election. Again, cluing us into just how much more mature this industry is in terms of mindshare and consumer demand. And then the last example I'll cite here are Base and Hyperliquid, so real on-chain use cases emerging where we're taking share away from centralized exchanges. On one end, we have Coinbase actively pushing people on-chain onto their Base platform by making the on-ramp from Coinbase to Base free. And we've seen the metrics reflect that level of user growth as well in terms of the active addresses going exponential for Base this year. And then we've seen protocols like Hyperliquid, which have really bridged the UX gap and is trying to bridge the execution gap for trading compared to centralized exchanges, which still hold outsized share in terms of overall spot and perp crypto trading volumes. And so as Hyperliquid has improved and grown their own volumes, derivative dexes have reached new all-time highs this year in volume share against centralized exchanges. And so to kind of summarize here, I'd say that we're moving away from these sporadic periods of user onboarding and user adoption, where we have these hype cycles driven by headlines that bring people on chain. And this year, we've really seen consistent user growth coming from a wide variety of different places. People are entering crypto, they're finding crypto, they're going on chain because of a wide variety of reasons. And it's been mostly application led. And I think this is a really positive outcome. We're moving away from relying on news and more so relying on real applications and use cases, slowly bringing in people over time, which I think we'll continue to see. And that just compounds further as the years progress. So really excited to see what 2025 has in store.
So from that perspective, what you expect is more of the same versus like, some kind of like breakthrough app that is going to unlock mass adoption with like a big bang.
Yeah, I think we'll see less noisy adoption, more consistent and smooth adoption. And instead of one noisy app, it's multiple apps bringing in people through their own consumer touch points. Going forward, I think the big unlock will be just improving the on-chain experience for retail. Right now, navigating crypto is quite a tough task. And I've seen some people talk about maybe we're interacting with the back end this whole time. Maybe DeFi, maybe bridging, maybe DEXs, maybe all the things that we're doing now and we're familiar with as crypto natives is really what should be the back end for consumer use of on-chain applications. And so one thing that I'm looking out for that I think will be a major unlock will be the growth of chain abstraction. So chain abstracted front ends that make it so that users never have to use a traditional bridge, can swap for any asset on any chain in one user interface. A front end that aggregates across chains, across DEXs, and kind of just strips away the friction that is currently holding people back from being full-blown on-chain consumers. And so, Infinex is a name to watch out for there. Azura is a name to watch out for there. I think these will be the next breakthrough applications that bring users on-chain.
What I was going to do, I was going to briefly jump in and say, and ask if chain abstraction, right? Are we going to see any real progress there soon, or that this is something that's just going to take time on chain abstraction, right? So yeah, we've written a bunch about it this year. It has been one of the narratives. How long is that going to take, right? So it's obviously a very complicated problem. Are we going to make any big strides there in 2025?
I don't think it will take long at all. I think we're already seeing the players there emerge and offer compelling products. And I think that will continue to happen in 2025. And I think chain abstraction will be one of the big narratives that actually was fully realized in 2025. As an example, Infinex is doing great work there. Azura is a protocol that I've been using to trade different assets that makes swapping cross-chain incredibly easy. And unlike some of the front ends in the past, or just trading-based applications in the past that really require, or it limits the universe of tradable assets that you can engage with, Azura allows you to basically trade anything on-chain through an intent-based architecture. I think we'll see real chain abstraction and chain abstracted wallets / front ends really come through in 2025.
How is AI going to play a role there, right? I remember that we wrote a couple of things about Wayfinder this year, right? Which is kind of like, to some extent, also offering a front end for users that is pulling things together in the back end, but making it a really easy experience, or at least that's what the vision is.
Yeah, I think we'll start with human solvers first before we get to AI agents moving vast sums of money across chain. But that is definitely something to watch. I think for now, we're still seeing, I think intent is a really new concept in and of itself. People are not really familiar with intent-based architectures and how they work. And right now, the solver networks for these different intent-based architectures are still quite nascent as well. They're usually just a couple of players that are basically, a middle layer to people expressing what they want to do on chain, to making sure that something actually happens on chain, whether that's a bridge, whether that's a cross-chain swap, whether that's a transfer. And so for now, I think we'll see human-based solvers play more of a role, at least in 2025. But maybe in 2026 and beyond, AI agents will be directing or coordinating on-chain activity.
Dylan, you talk about real-world traction in your DePIN section. How could DePIN potentially play a role, right, in terms of adoption, and how near-term is that?
Yeah, so I think we've seen a lot of real-world adoption in DePIN in 2024. So like some high-level examples are Helium with Helium Mobile. So say $20 a month unlimited data mobile plan, and it's grown to over 120,000 subscribers in just 1 year. So I think that's like the biggest example of real world utility coming out of crypto, real world adoption. Helium's also providing a carrier offload program, which means that they partner with the very largest telecom companies in the US and then basically use their Helium hotspots to provide coverage to those customers in areas where the large telecom provider doesn't have coverage. So this is like kind of a deepening problem in the 5G era, where it's becoming very expensive in terms of capital expenditures and operating expenditures to expand coverage for faster internet, and DePINs come in and to help expand this coverage in a more capital efficient way.
To the point of like abstracting crypto away, right? To a large extent, this is all under the hood, right? In the case of Helium, if you're on that plan.
Yeah, that's exactly right. If you subscribe to Helium Mobile, you don't have to interact at all with crypto. You can just pay in fiat, you get your internet, and then the crypto element, the tokens, the various mechanisms are all happening on the back end. So yeah, it's fully abstracted away. Other wireless companies that have emerged in DePIN, like Dawn, it's also fully abstracted. They enable you to have at-home multi-gigabit internet, roughly equivalent to fiber optic level speeds, for 80 to 90% cheaper, and you don't have to interact with crypto. XNet's another example doing carrier offload, where the crypto elements, again, not visible to the retail or the large corporations on the other side. So yeah, I think like that's been the biggest example of real world adoption. We've also seen some in energy. So Glow, they're a energy protocol that helps incentivize solar panels, and they create carbon credits out of these and sell those to the market. They've managed to build over 70 solar farms in 2024 since launching in December of 2023, from California all the way to India. I think it's over 40,000 solar panels, 1.7 million kilowatts of energy produced, and they're bound for large expansion next year as they grow and refine their models. So that's another example of real world utility. I think the third I'd highlight is GeoNet. They're what's called a real-time kinematics, RTK for short, DePIN. So they basically, you have like a satellite space, it does GPS location, it finds the precise point on Earth, but because of the environment and various influences, it's usually 10 to 20 feet off. And an RTK station on Earth basically intercepts that signal and corrects it to within 1 centimeter. So you're getting the exact location. So if you're doing like drone delivery or augmented reality or autonomous vehicles, you need that exact location. You need these RTK stations. And what GeoNet's done is they've built a 11,000 node network in just 1 year, which is already the largest RTK network in the world. And they can do it for very cheap using DePIN. So you just, if you're a user, you buy a $700 GeoNet device, deploy it, and that's done. If you're like a centralized company, you'd have to pay for real estate costs and more expensive permitting and operations and maintenance. It's usually in excess of 20K per location. So DePIN's reducing the cost from 20K to 700, and that's enabling basically a type of network that's global and has full coverage or expanding coverage. We think we'll have full coverage by 2026 in a way that we haven't seen before. So I think we're seeing real world utility, real world use cases, and novel applications that just weren't possible before.
So we have a whole separate pod dedicated to DePIN, but for the purpose of this discussion here, can you tell me briefly about DePIN's breakout year? Messari put DePIN on the map starting in 2022, but 2024 will go down in history as the year where it really took off.
Yeah, so I mean, in terms of like market cap, it's up 140, 150% this year. Most of the crypto markets are up with the bull market, but DePIN stood out in that it was rising when everything was down in the March through basically October months. The breakout has come partially from the real world use cases and utility that I described. So just recognizing that crypto can create real world value. It's starting to create real revenues. So DePIN before 2024 was generating negligible values. Now we have probably over 10 protocols generating 7-figure annual revenues, somewhere in the 8-figure range, like Glow, they're at over 25 million, Helium's at over 12 million. So we're seeing real revenues coming in, proving that there's real utility being generated. And since crypto's had a revenue problem, DePIN's kind of maybe the most promising way to create real businesses out of crypto that's creating real value. So I think, yeah, real world traction, real revenue being generated. And then we've seen absolute proliferation in early stage fundraising. It's up like over 300%. So we're seeing a lot of DePINs, very early stage, not quite in mainnet, but very promising models that will be launching in 2025. And I think there's a lot of market excitement from that that's been priced into the current valuations.
We are seeing some evidence that a different type of institutions that have been here for quite a while, being VCs, are getting more interested in another sign of the adoption, or a sign of adoption, like applications, right? Traditionally, obviously, there has been a lot of investments in infrastructure. But well, first of all, Messari fundraising data set is the most comprehensive analyst curated database in the industry, and providing us with great insight. We have monthly reports on that for subscribers. Before going into any specific fundraising trends, Andrew, can you give us the highlights of 2024 in terms of fundraising?
Yeah, so the biggest raises of 2024 were still mostly infrastructure based. Protocols like Monad, Eigenlabs, Celestia, and Barachain. But to your point, and to Dylan's point, we noted that there's been a huge increase in investments in the AI and DePIN space. AI and DePIN were up. Fundraising amounts were up, I think, around 100 and 300% year over year, respectively. And that's probably going to continue to be a point of focus for VCs going into 2025. Within AI, we saw an $85 million raise for Sentient, which is looking to create an open platform for AGI development. As I noted in my Q3 review, AI is kind of now an unavoidable topic, and it's penetrating into different verticals. So VCs kind of need to have an opinion on how AI development is going to impact whatever category they're looking at, including gaming, social, even infrastructure itself. And smaller trends that we saw also involved decentralized science. Sunny mentioned gaming on the TON blockchain and through mini apps. That was pretty big earlier in the year. And then we also saw some larger investments in social platforms like Farcaster and DeSo.
Dylan, I remember in the summer, we had an analyst discussion piece on the infra versus apps debate. Do we have a trend here, or Dylan and everyone for that matter, in terms of, VCs getting more interested in and focused on applications?
I think it's been pretty clear that the second half of the year, it has veered towards applications, whether that's AI or DePIN or DeFi, more consumer-focused applications. So I think, like, in terms of the debate we had, VC is looking more towards applications. I think there's been a period of them trying to figure out what's going to get product market fit and traction on the infra that they've already invested in. And I think they're starting to figure that out. I think it is at the intersection of AI, DePIN, certain consumer products. Polymarket was a big breakout success as well. So I think we're seeing things go into the direction of applications.
When it comes to mindshare and narratives, it definitely feels like infra has been a bit more in the background this year. A notable exception is Solana, which seems to have crossed the chasm in 2024, and now we have the big three together with Bitcoin and Ethereum instead of just the big two. We have an entire pod on Solana. So for the purpose of this discussion, let's focus on one of the catalysts here, trading activity around Memecoins. Sunny, what did we see here in terms of Solana?
Yeah, on meme coins, definitely a part of the 2024 timeline. And I think the meme coin craze on Solana probably started in the second half of 2023. And so I think it was a combination of two things. The first was that you saw a Solana-based wealth effect arise from both Solana's price increasing throughout 2023, as well as a number of Solana ecosystem airdrops, which include Jupiter, Drift, Pith, Jito, Margin Fi, again, which compounded into this early wealth effect for Solana in 2023. And what it ended up happening is you had all these people that are now feeling a little bit more wealthy on Solana. There's ample block space, given the fact that Solana is a high throughput, high performance chain, and not that much to do on the blockchain in general. And so, where did that money end up flowing? In early meme coins like Bonk and WIF, which ran to multi-billion-dollar valuations. And that has really persisted all throughout 2024. There has been enough overall liquidity to support multiple new meme coins now that have broken the $1 billion market cap mark. Popcat, WIF, Bonk, Goat, Pepe is now approaching Shiba Inu in market cap. And so I think that, while this phenomenon was really Solana led, I think you can trace it back to a couple of specific drivers on Solana. And throughout 2024, meme coins as an overall category has expanded far beyond that of just Solana. And I expect this trend to continue.
So meme coins in general dominated the narrative in crypto this year. You wrote an entire section about it. Can you give us the scoop? This is more about meme coins in general, right? Not about Solana.
Oh, meme coins in general?
Yeah, so I'm switching gears now to your section on meme coins. So my first question is, basically give us a high level overview of the emerging trends that we've been seeing in meme coins. And then my follow-up question is going to be, what is ahead for 2025?
Yeah, so I think meme coins have really taken off due to a number of factors. I mean, earlier on, the wealth effect and the excess block space, which I mentioned, were definitely added fuel to the fire. But in general, I think there is this growing sentiment from crypto users that there is no money to be made with highly capitalized VC-led, infrastructure protocols that launch their tokens at multi-billion-dollar valuations, and that the golden age of crypto really occurred earlier on when real retail users were able to buy tokens and buy into protocols at an earlier stage. Sort of the high FDV, low float debate that we've seen persist throughout 2024, and which we've written extensively about. And so, that has certainly been an underlying driver. Murad has come out and given his thesis on the meme coin supercycle, where he kind of applies some more qualitative elements to the story, some more philosophical elements to the story, including the fact that, young people today are feeling poorer and poorer as the years go on. They're kept out of all of these asset classes that the wealthy can accumulate, such as stocks, such as real estate, where most of the growth has already happened over the past few decades or so. They're feeling lonelier. They're feeling like they lack communities, and so meme coins. So there is this idea that meme coins are both a way for people to potentially make more money than they could elsewhere, but also to find real communities. And so those qualitative elements kind of built up into quite a retail-driven phenomenon throughout 2024. And as I've mentioned earlier, we've seen multiple meme coins now cross the $1 billion market cap mark. Now, I think that will continue. We've seen many of these meme coins listed on tier 1 centralized exchanges, which I think will continue as well. And so there's really no signs of a slowdown so far. Even towards the back half of 2024, we saw meme coins tied to AI agents become a completely new sector and take a life of their own. And so I think this will continue happening. And overall meme coin market share is still relatively low compared to other sectors. And I expect that to grow going forward.
So what's ahead for 2025 for meme coins? Where is it going to go from here?
I think we'll see more widespread adoption driven by a wider meme coin ecosystem, more stakeholders involved, more applications that have to do with meme coins. And so as an example, in 2024, we saw the rise of DEX trading bots, which were largely built around meme coin trading and getting traders better execution than typical spot DEXs, and giving them a better user interface. We saw the introduction of Pump Fund, which allowed users to launch their own meme coins, completely seamlessly. We saw SocialFi apps come out built around meme coins. We saw meme coin based mobile applications like Moonshot. And so I think development in meme coin related infrastructure will continue, grow the overall audience for potential meme coin enjoyers. And so, for 2025, I expect to see overall market caps for meme coin as a total sector continue to take share from other sources of speculative activity that occurs in crypto. And so, yeah, I think meme coins are here to stay.
First of all, I've heard people call meme coins a potential Trojan horse, and the thinking being, that it's pulling people into crypto, but then when it's there, they will engage with other applications like on-chain exchanges and that kind of stuff. Yeah, how could meme coins help drive the adoption, right? And is it actually attracting a lot of new users into crypto, or is it the same bunch of degens chasing after it?
I think meme coins are really mindshare viruses. They just kind of grow and fester online and spread pretty rapidly. And so I've certainly, like from a qualitative perspective, seen many of my friends get into meme coin trading that might not have interacted with the blockchain otherwise. And specifically, as you see more and more of these meme coins launch on centralized exchanges like Binance and Coinbase, and also on exchanges like Robinhood, more people will have exposure to them. More people will start looking into what they are, and more people will start realizing that they're buying these meme coins when they're already, $1 billion plus in market cap or 2 billion plus in market cap, and they're thinking, how can I get in on the next Pepe or the next whiff earlier on? And the answer to that is really just to move on chain and to use some of the spot dexes that we have available, like Radium. Start seeding your first self-custody crypto wallet. And so I do see it as a major adoption driver. I think it will continue to be a source of adoption for crypto in the years to come.
Great. Well, so we covered a lot. To wrap up, would love to hear from all of you any hot takes that you have for 2025.
One thing, as we talked about the success of the ETFs, one thing I'm thinking about is that at some point in 2025, maybe that's in March, maybe it's in 6 months or in the latter half of 2025, I think at some point we're going to see increasingly massive flows into the ETFs, probably multiple consecutive $1 billion inflow days. And I think at that point, people will be fairly euphoric. They're going to be saying that this time is different because BTC is now going to trade like SPY because it has such a strong passive bid and it's a new paradigm of sorts. And at that point, people will largely forget that both institutions and retail alike are prone to FOMO and momentum chasing, and that drawdown still exists. And at that time when everyone's like excited about the future and super pumped that there's just this underlying consistent bid and through the ETFs, I think that will probably be close to a longer term top. And it might coincide with, as tops often do, it might coincide with an event like the Solana ETF maybe launching in the latter half of 2025. But there will be a point of peak optimism and where things look like they continue to get better, and that will probably be close to the top.
I think ETH outperforms in 2025 on the back of a beaten down 2024 and some bullish ETF inflows. I think Base will be the best place for DeFi in all of crypto. I think we'll see DEX share of centralized exchanges double in 2025, and I think we'll also see overall users double in 2025. And maybe on meme coins, I think we'll see a couple meme coins go parabolic.
So on the policy side, I think 2025 is make or break for major regulatory changes and legislative bills. So if we want a strategic Bitcoin reserve or eliminate capital gains taxes on crypto, I think it has to happen next year. And that if it doesn't, I think other political issues will become more salient and important, and that crypto will be kind of swept to the side and there won't be enough political will. And I think might also be a change with 2026 with Congress. So I don't think it'll be on the cards anymore. And then I think DePIN will exceed 100 million in revenue, growing to maybe up to 200 million in 2024. So I think, or 2025, sorry. So I think we're going to see a real industry really emerge here where people can start building out financial models and looking at the cash flows and start doing valuations. I think 2025 will be the beginning of that.
Maybe one follow-up question, right? So obviously, in State of Crypto this year, three specific topics were Solana and DePIN and Memecoins, right? And you commented briefly on some of those in your comments just now. Is there anything else that is going to be on that list that we're going to be writing about next year?
Yeah, I think you mentioned briefly, what the AI angle for chain abstraction. I do think we're going to be talking about agents for most of 2025. What Sunny was saying about, first we're going to use human solvers to kind of improve the UI of interacting on chain. I think the next iteration of that, as you said, I don't know it seems like progress is developing rapidly, so it might be in the latter half of 2025. But interacting on chain through an agent, through natural language is, I think, the next iteration where, you just tell it what you want to do, what you want to swap. And, you might be able to set up rules for it where it just does things autonomously for you. But yeah, I think agents more broadly are going to have huge network effects, and the protocols that are building now and have the most developer activity are probably going to be topics of conversation going throughout all of 2025.
I'm excited to start writing more about applications and less about infrastructure. I think if you look at the highest earning protocols in crypto, you have Ethereum, Solana, I think TRX, and then a bunch of applications. And so I think the sentiment is going to drastically re-rate back towards applications over infrastructure. These are the protocols making all the money. These are the protocols engaging with the consumers. These are the protocols driving real crypto progress. We have Solana now. We have newer layer ones. We have newer alternative layer ones like Hyperliquid and Sui and Aptos that are highly performant. I think the next stage is covering a potential new crop of applications that are really going to start showing product market fit and really start out earning everything else in crypto.
Yeah, I think I'm excited about DeSci. I think we briefly touched on it. But I think there'll be hopefully a breakthrough application in next year. I think there's a lot of catalysts in terms of AI drug discovery and gene editing. We're having control over both your own data genetically, and then just having a more integrated system that can take advantage of crypto funding and crypto economic incentives. I think there's a lot of potential there. So I think DeSci could be one of the bigger stories in 2025.
Okay, well, thank you for the discussion. Look out for the other parts related to the thesis, and also pick up a copy of the thesis itself. It's a monster of a document packed with analyst insights that should give you a really good lay of the land of what happened this past year and what is in stock and get you excited